Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. How to trade is once again the top trending search term on Google. This comes as no surprise, considering 2023 is certainly shaping up to be an incredibly lucrative year for traders. With China's comeback, the re-accelerating inflation, the energy transition, and a brewing global banking crisis now emerging as four of the biggest and most explosive macro themes driving the commodity markets right now. As a result, there's really nothing historical you can point to for what is going on in the markets today. Each and every one of these highly macro themes is fueling one of the greatest wealth transfers of our lifetime, presenting savvy traders with an endless flow of back-to-back trading opportunities on a daily basis. So far this quarter, we've seen unleashed opportunity on top of opportunity for traders, with a magnitude of hotter than expected economic reports, stickier than expected inflation, and of course China's great reopening. And just when traders thought things couldn't get any more exciting, we now have another major banking crisis currently unfolding. To understand this, you really have to go back to the start. There's no denying that the Fed's battle against inflation, that was never going to be easy. But policymakers only have themselves to blame for creating crisis on top of crisis by falling behind the curve on inflation for the third time in 2 years. In 2021, the Federal Reserve, they got way behind the curve in tightening monetary policy, playing down the biggest year-on-year rise in prices as transitory. The result was a surge in inflation to levels not seen in more than 4 decades. In a belated response to the record spike in inflation, the Federal Reserve that embarked on their most aggressive hiking cycle since the 1980s, raising interest rates 8 times in a row since March of 2022 by a total of 450 basis points to date. And then fast forward to the Fed's first monetary policy meeting of 2023 on February the 1st, policymakers made their biggest misjudgment of all, prematurely declaring victory on inflation too soon and labeling 2023 as the year of disinflation. This may end up being remembered as the worst inflation call in the history of the Federal Reserve. Historically, the Federal Reserve, they have never been right on inflation. They've got a proven track record of getting it wrong time and time again. As a result, every one of the Federal Reserve's quantitative tightening cycles has ended up breaking something in the financial system. In 2012 to 2013, when the Fed sent mixed messages to the markets on their monetary tightening campaign, known as the taper tantrum, that led to traders dumping risky assets such as equities and currencies and piling into safe havens such as commodities to maximize on the dual benefits of safety and high returns. This resulted in one of the best performing periods for the entire commodity complex. Then between 2018 to 2019, when the Fed began aggressively tapering its balance sheet, that led to the repo market meltdown, which once again that led to traders pulling their money out of risky assets and piling into commodities. And I'm sure you can guess what happened to commodity prices. Surprise, surprise, the Federal Reserve is breaking things again. Last week, commodities were once again the safe haven trade, following the second biggest banking collapse in history since the 2008 global financial crisis. More than $55 billion was wiped off the equity markets in 24 hours on Friday, following the collapse of Silvergate Capital and Silicon Valley Bank, ranked the 16th biggest bank in the United States. Both Silvergate Capital and Silicon Valley Bank put their money into US Treasuries, which have lost their value since the Fed began raising rates, leading to their eventual collapse and potentially creating a domino effect that could fuel a further financial crisis ahead. The markets immediately reacted with a long list of commodities from gold, silver, palladium, platinum to crude oil, all skyrocketing to multi-month highs, with many notching up spectacular double-digit gains. And this is just the beginning. Commodities, they're becoming everyone's favorite asset class yet again. And the good news is this trend is here to stay and set to continue throughout the rest of 2023. Since the beginning of the year, a growing chorus of leading Wall Street banks, from Goldman Sachs to JP Morgan to Bank of America, they have continued to signal the macroeconomic backdrop for commodities is looking more bullish than ever before, predicting commodities will be the best performing asset class in 2023, outperforming every other asset class out there for a third consecutive year running. And now we could be about to see why. If you've been kicking yourself for missing out on some of the biggest trading opportunities in 2021 and 2022, then you've been gifted a second chance. If you want to take advantage of this huge money-making potential on offer, then there's no better time than right now. Banks, hedge funds, they're making multi-billions capitalizing on the huge macro-driven trading opportunities, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, have already made in excess of 6 and 7 figures, and we're only in March. If you want to supercharge your trading results and make 2023 your best year yet, then go to www.jointhegoldandsilverclub.com now to learn how a mentorship program can take your trading to the next level. So with that, we'll move over to the charts and we'll talk you through exactly what we're looking at here as we head into next week. We discussed this with you in detail last week on the commodity reports, that essentially we perceived the massive buy opportunity on oil if it was to get back down towards $75 per barrel or lower. At the start of the week, over 2 positions, we banked 650 points per trade there. So of course, for every 1 lot that you would be trading, that's $6,500. Every 10 lot that you'd be trading, that's $65,000 on oil there. And then of course, after banking above $80 per barrel, we did see the inevitable sell-off that we had been anticipating in the lead up to non-farm payrolls. And in fact, we got a 500-point breakdown all the way back down to $75 per barrel. As I highlighted with you last week, time and time again, it is an opportunity right now to keep trading the ranges here on oil. So this will be now the 5th time since the middle of December that we've seen oil get a lovely bid here as it's come back down towards the lower end of the range here. Each time we're getting a slightly higher swing low as well. So we've taken the opportunity here to build into multiple positions yet again on oil, particularly on the sell-off that we saw on Thursday through to Friday. Those trades, they immediately moved into profit into Friday's close, and they're looking really solid here with a 1.6% gain on oil into Friday's close. So I do hope that many of you were able to capitalize on that. Brent crude oil as well, as I mentioned previously, if it was to get a retrace back down towards $80 per barrel or lower, these would definitely be zones of interest. I would certainly also have that on the radar as we go into next week. So for argument's sake, if we were to get to 80 or lower on Brent, these are certainly areas where I would be very interested again in adding further exposure. We also caught the move here on silver when it was at $20 per ounce here on Thursday through to Friday. As we mentioned on the report there on Thursday that we like silver at $20 per ounce or lower. In fact, on Friday at the peak of the breakout, silver broke out 3% to the upside. It closed at $20.50. This was very fast profits for us. We only got into the trade on Thursday. Immediately on the Friday after non-farm payroll, we got the breakout. In fact, you can see the trajectory that we are looking for silver to start moving into as we approach CPI data next week. We're looking for an initial spike and then a pullback as we start to head into the European Central Bank, and then quad witching, and then further upside once we start to transition into the end of the month and then moving into April. Very similar on gold here as well. So we have had that impulse move that we discussed with you last week as well. Gold prices, they broke out just under 2%, getting the safe haven bid, of course, on Friday as well. My expectation would be that we may get a little bit more follow through at the start of the week in the lead up to the CPI data, where you often see a spike off that CPI figure. But then I would keep an eye out for the potential bull trap here afterwards. Then we could get another pullback here as we move into Wednesday, then Thursday's European Central Bank, and then Friday's quad witching, in which case there might be some great opportunities to reload at lower prices. So that would also definitely be on the radar. Platinum 2, lovely breakout to the upside on Friday, so it surged 1.89% as well. As you know, the platinum to gold ratio throughout the whole month, it's been trading around the 0.5 level, finding support where platinum prices were half the price of gold. The previous week to that, of course, platinum prices, they surged 8%. They went up 830 points from the lows here to the highs. And we also saw natural gas prices too. They broke out 20% the previous week, where we in fact banked 700 points profit. And whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action to really give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, you need to adapt your strategy to the current market conditions, and most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that do not work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8 figure returns in the markets right now, then you need to utilize a professional, research driven approach, or you just end up wasting lots of time, money, and effort and have no results to show for all of your hard work. In these rapidly changing markets, you need to constantly be innovating and evolving. Technical analysis and outdated technical indicators, they will not work. Those days, they're long gone. If that's all you're relying on, the odds are already massively stacked up against you. If you want to change your results, you have to change your thinking. If you want to learn our exclusive research driven approach that is never taught to retail traders and is only reserved for professional traders in banks, hedge funds with access to powerful game changing insights, including where banks and hedge funds are buying and selling in real time, the key liquidity zones so you can enter and exit the markets with pinpoint precision, the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, and quarterly real time data driven cycles and intermarket correlations, then you need to join our mentorship program. As we head into the new year, we are in one of the greatest eras of wealth creation the world has ever seen. If you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, there's no better time than right now. If you want to upgrade your income, then you need to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars, you get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.